Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be analyzing and reviewing Uber, the big ride-sharing company that also does a lot of deliveries. I'm sure you've heard of them. You've either taken a ride with them or had some food delivered or maybe had some groceries delivered by Uber. So I like to scorecard my investments, and it involves 4 metrics with 1 decision. First, do I want to be a part of this industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want to get a discount on the stock. Those key metrics lead me to a decision. Would I buy this stock today? So the scale that Uber has established is really impressive. For mobility, they have a network of drivers across 10,000 cities, over 72,000 countries. That network enables them to, in many cases, use the same drivers for delivery for both food, groceries, and other items if somebody wants to buy a product and have same day delivery. And they also are establishing a freight business so that they can help, schedule freight, and businesses could schedule big freight loads. So just tremendous scale and a tremendous platform that they have around the world. Over the last 12 months, the stock has somewhat traded sideways. You'd be down 15% if you bought exactly 1 year ago. And in 2022, the NASDAQ really went down a lot, went down more than 30%. Some companies like Tesla went down more than 70%, as an example. So 15% down isn't too bad. Now, more recently, it's really gone up, starting in the late 2022 timeframe. Really nice, gain over the last, let's call it 30 days. As we look at the 5-year chart, you can see that they had a peak in early 2021, but really started the downward, trend over time. I think part of it was that they were not profitable. They were burning a lot of cash, and that really affected their valuation, along with economic factors that came into play. Interest rates went up and so forth. So I think that there's good probability that they're starting a good upward path and can get back to that $60 per share or higher, especially if they maintain their free cash flows, that they just started becoming positive free cash flow, and they continue to grow as fast as they do. I think they could really double very quickly in value. And I'll be looking at their next earnings call on February 8th to see how well they did in Q4 of 2022. So I value companies using their free cash flows and then discounting those free cash flows with the weighted average cost of capital. A couple other factors that come into play. First, I used their free cash flow that they produced in 2022. There's only 9 months that have been closed. So what I did is I annualized that number. So I was able to get 1.18 billion in free cash flow. That is what I expect they're going to generate in 2022. Using that as the starting point, I grew cash flows in year 2, 3, 4 by 30%. Since they are a high growth company, revenue as an example in Q3 went up 80%. So very dynamic, very fast growth, but perpetual growth after those years will be at 6%. Weighted average cost of capital is going to be 9%. So those factors in my model, they come to a valuation of $65 billion is the value of Uber. The market cap right now is about 58 billion. So it leaves a small discount on the stock. One thing that is a negative check mark on Uber is their debt to EBITDA ratio is actually negative because their EBITDA is negative for 2022. Therefore, that's a negative check mark. If they become profitable, they establish positive EBITDA, that could change very quickly because they don't have a lot of debt. So overall review of Uber, first, they were the pioneer and the leader in this space. Just they saw that this was a marketplace that needed to exist and really pioneered the ride sharing industry. They've set up a global network of both the technology, the drivers, the brand recognition, across 72 countries, which is impressive. They have great revenue growth. Their revenue is just expanding incredibly, and they've already started generating free cash flow. They have just proven scale, and I believe that scale could be the method by which they're going to be very profitable, and they can generate even more free cash flow because they don't have to invest much more since they have the scale, they have the platform. More recently, for 2023 guidance, they need to they need to report Q4 earnings. In Q3, they reported that they had 30% bookings growth, and they had 81% revenue growth. They guided that in Q4, they expect that their bookings growth will be between 23 and 27%. I equate that to being 60 to 70% revenue growth is what I expect in their Q4 announcement. I expect that they're going to be profitable in that quarter and generate more free cash flow. And I think if they deliver a good earnings report, that report is going to send the stock going up. My outlook is this is the leader. This is the leader in rideshare and delivery, a very recognized brand. And I would say a majority of people, especially in the United States, have the app on their phones. So it's really set up well for the future, a future where they're going to have high growth, better profit, and cash flow will increase in the future. I have a small position in Uber since they have a very small discount. I'm not betting big on Uber just yet, but I really study their earnings releases to see that they are really going to continue their trajectory of growth and their trajectory of free cash flow generation. If so, then I'm going to start betting bigger on Uber. So let me revisit the scorecard for an active value investor. First, for me, this industry is really exciting. I think it's an expanding industry internationally. There's just a lot of good stuff going on for Uber and for this industry. The company is, in my opinion, the best company in the space, operated and performing great. One ding on them is their debt is negative, or their debt to EBITDA ratio is negative. So I have to give them a negative check mark there. You get a tiny discount, which I made a small check mark to symbolize a small discount there. And right now I'm not buying any more shares. I'm waiting for February 8th when they have their earnings announced and see if that changes the valuation and see if I'm willing to buy more shares or if I need to hold or if I need to sell. Thanks for watching my video. I hope you found it interesting. Please keep in mind, I'm not recommending that you buy Uber stock. I record these videos to share a small investor's point of view on Uber, and hope you found it interesting. Good luck investing in 2023.